morning, everyone, and welcome to the Beginners Online Trading webinar, the Trading Success Blueprint. My name is Dan, and I will give you the webinar today. First, before we will begin with the webinar, I would like to explain how the webinar is going to happen. So, the first part will be more of an introduction to the company and the services that we see here in this facility. We'll get into deeper depths into basic trading essentials on the second part, and lastly we'll have analysis. So the first part is more of an introduction, the second part is the majority of the webinar, and it will be very practical, giving you guys the tools to have a better approach to the market. And lastly, if we'll have additional time, so perhaps we will also introduce analysis. Nothing too crazy, just to know the idea and perhaps how to implement it as part of the strategy. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or suggestion. Now, a very common question is if it's possible to get a recording of this webinar, and as I always say, the webinar is recorded and it will be uploaded to our YouTube channel later on. So if you wish to recap any part of the webinar, if you want to watch it again, all you have to do is basically go to YouTube, look for Ava Trade for our channel, and in our channel you're not only going to find this webinar's recording, you're going to find all the webinars recording, which I strongly suggest, especially because this webinar is destined for beginners to use the content. There is a lot of content there, a lot of webinars for you to watch. Before we will begin, I would like us to have a notepad for the notes. All right, so as I said, the beginning is an introduction to the company. As many of you guys know, we are here since 2006. We have 9 licenses worldwide. Our customer service for any questions or queries is accessible via the chat here at the bottom left. You can either chat with us or you can send us a WhatsApp, or for different user interfaces, you don't use this interface. If you're using MT4 or MT5 and still wish to contact customer service, you can simply directly send them an email to cs@avatrade.com. They will assist you with everything's related to customer service. And on the trading side, you can have a senior account manager assigned on your file, assisting you with all the trading aspects. In terms of a strategy, calculations, analysis, risk money management, really anything that you can imagine under the trading umbrella, a senior account manager is the go-to person. All right, so let's carry on with the other platforms. Although the webinar will proceed on the web trader, but I would like to jot it down just for you guys to know what platforms we have. So, as I said, this is the web trader. We also have MetaTrader 4, MetaTrader 5, Ava Social, and Ava Options. And the web trader will be separated here at the bottom. Okay, to access the web trader, all you have to do is just basically log in with your email and password, and you're supposed to click on web trading or web trader. The web trader that we're seeing now is the desktop version. If I would like to use it in the app, I need to search for Ava Trades trading app. Okay, it offers similar features. Obviously, in a phone, it will look different in the computer, but this is the desktop version. One of the platforms that I would like to expand a little bit is Ava Social. And the reason is that Ava Social allows you to use 2 main functions. Okay, by its nature, Ava Social is a social media platform. Okay, and what it does is it basically lets you pick another trader and to either follow or copy them. And what happens when you're following a person, when you're following another trader, is that you're simply going to get notifications with the positions that the trader is taking as a message, and you decide if to do this or not, if to take the position exactly as you received it, or you wish to modify that, or you wish to just keep the position in the records, just for research purposes, but no positions will be happening automatically. It means that my account, while I'm following, is not going to execute any positions on my behalf. On the other end, when I'm copying another trader, I will enjoy the same process, but the positions will also be executed automatically. It means that my account will trade exactly as the person that I'm copying will trade. However, when using Ava Social, there is a huge benefit that lets you customize the difference, okay, in lot size. And in case your balance is not compatible with the person that you're copying, so let's say that, okay, so now with this demo we have 10,000, but let's suppose I'm following someone with 50 or with 100,000, and he's taking positions that my account might not withstand in terms of margin. So what I can do in the app, it's not something that I can show you now, but what I can do in the app is to customize the difference in lot size. I'm still going to enjoy the same strategy, but with a different lot size. And that means that my account will use lower margin versus the person that I'm copying, okay, if it makes sense. So let's just quickly recap. In copy, I'm actually going to have my account executing positions automatically, okay? Since I'm copying another trader, I'm copying and I'm doing the same as the other trader, and I can modify the lot size to my liking. And of course, I can go back to the history, to the positions, and I can see exactly what it did. And I can then review and analyze it in the way that I want. And with follow, we don't get the automatic execution part. Okay, I'm still going to get notifications and messages, but it's up to me to either trade or not. All right, do we have any questions regarding Ava Social before we carry on? As this is a webinar for beginners, as I said in the beginning, and to my opinion, Ava Social is quite amazing because of those two features. No questions. Excellent. Let's proceed. A question from Leon. Is it free? The app is free. The app is free, so you can download the app and enjoy what I said. I believe that copying another trader will have a markup, but this is something individual that you need to know when you download the app and you try it. All right, so let's proceed with the web trader. The things that I'm going to show you now are only on the web trader or the trading app, are not features that included it with MT4, MT5. Let's actually begin with Ava Protect. I didn't show it for a while, and I think it's appropriate, especially with such fluctuative days that we're having. Question here from Peter. Is it available on Linux? I believe it is. I believe it is, but I'm not such a tech guy, so unfortunately, this is something you might want to try on your own. Right. So like I said, what I wish to show you guys is called Ava Protect, and the reason that I'm showing you guys is, as I said, this is a webinar for beginners, and using Ava Protect actually gives you the ability to get your losses back. And I'm going to show you now exactly how it works. Okay, of course, there's certain conditions to it. We're not going to get our losses forever, only during the coverage, and I will explain what it means. So we have Ava Protect. Again, I'm going to quickly repeat what I said. It's only on the web trader in the app, and it's only for currencies, only for Forex, gold, and silver. And the way that it works is not something you have to remember, guys. You saw that when I point here on the bubbly thing here, it explains exactly what Ava Protect does, but I'm going to simplify it with my own words. So Ava Protect lets you protect the position for a certain time frame. Okay, whatever you lost during that coverage will be returned, and there is a fee when using the service. Now, obviously, when I'm using the product, I need to use it efficiently, and I can just click here, buy or sell. Why not? Because as you notice, when I'm using the product, there is a fee that I must pay. And what I want to do is I want to make comparison between the fee that I'm about to pay, depending on the time, depending on the load size. And if I change the load size from, let's bring it back to the minimum. So let's suppose that now covering this position, again, from what we see here, I can cover the position and whatever I lost will be returned. Okay. So that means that I can cover the position for an hour. Basically, whatever I've lost during that hour, I will get back. I would like to point out that the expiry is here. Okay, and as an addition, we may not expend the time after the expiry. Okay, that means that 1 hour, when the coverage is done, the coverage is done, and I cannot expend in another hour. Of course, I can take another position which will be covered, but I cannot make another hour on top of existing position. Now, in this scenario, let's just quickly write down a few numbers just to have the scenario in mind. Nothing too crazy, so I'm just going to point out the fee here. Take profit, okay. Okay, and the way that I'm going to use it now is to show you guys, just a second, to have the ability what to expect to gain or lose versus your fee. And why would I want to do that? Because let's suppose that I'm covering this position for a good, let's say, day. The way I'm going to repeat that process, and I'm going to show you exactly how I did it and exactly what I'm trying to do here. Okay, but just as an example, let's suppose that we took the max, even 2 days. Okay, and I closed the position. Making $50. Okay, it went up. Currently, we are with a buy. Let's suppose that it went a little higher. I closed the position. I made $50. Okay, but I must not forget that I'm paying a fee here while I'm using the service. So what I'm going to show you now is how to simulate the possible profit or loss, so you won't end up making or losing less than the fee, which is quite pointless, right? Purpose here is to protect my position and get back the losses. Therefore, if I click here on the take profit, I enable the take profit, and I click here on the stop loss, I enable the stop loss. What actually happens now is if it gets to that level, it's going to close the position automatically with a profit, since we are with a buy. And if it gets down to that level, then we can potentially lose 160. Okay, so take profit takes the profit, stops the position automatically with a profit. Stop loss stops the position automatically and cutting my loss. Now, actually, this comparison is not bad. So let's have a look at the fee. Okay, and tell me, of course, the comparison, the ratio here is not great, but as an example, it's amazing because I can show you guys an example of. I would like to let you guys judge. In this scenario, I'm about to pay a fee of $274.25, and my potential gain is 160. How does that look? Does this justify me using the service or not? Would you call it using it efficiently? Using a fee to protect my position, which is greater than my profit and it's greater than my fee. Does this make any sense? Not really. So what I want to do is I have three ways. I basically have two ways to control a fee. Okay, and that's by either lowering the coverage. As you can see, 274 is where it's at right now with 0.10. But if I decrease this, let's decrease this for a day, so the number got lower. I decrease, so it decreases. It decreases again, and this decreases again and again and again. And for 1 hour, and we are at the bare minimum, and we are now paying 10%. Oh, the audio was lost. I have comments from the audience that my audio doesn't work. Is my audio okay, or is it still okay? Thank you, Frank. Thank you, Peter. Okay, great. So what I wanted to show you guys is to be able to control the fee, so you won't end up paying a greater fee than what you're making or losing. And that's by simply changing the lot size here or the coverage length. Now, if I will expand the take profit by $1 and I decrease this by $1, that means that now, even if I'll go back to 0.1, sorry, now the fee versus my possible profit and possible loss is much, much better. Okay, and I'd be happy to pay 274 to make 1,100, or potentially lose 1,100, right? So this is a better way, better example using the product with our simulators that you can change the numbers and see what makes sense for you or not. Okay, so as we said, few simple rules. One, it's only for currencies gold and silver. Two, when we take the coverage, we cannot expand to longer coverage. And third principle is that we would like to make a quick comparison between what we are about to do on the position to the fee that we're paying, so we won't end up using this product inefficiently. Okay, let's carry on. So beside AVA Protect, to the left, as you guys probably notice, we have here some very interesting icons. And here at the bottom, so if I go from the top, here I can find my personal information. Underneath, we have trade, which we are where we are at right now. In here, the positions. In here, the orders. So this is for pending orders. History, signals. Okay, so in the signal section, you can enjoy all kinds of signals. Okay, it's very easy to use. So if I'll take Dow Jones as an example, and I'll click here on View Signal, then I can see the chart here with support and resistance. And underneath, I have a sell scenario or a buy scenario. Let's, in this case, go along with the advice here with the buy. Just click on buy. And then I already see that the take profit and stop loss are marked for me. Of course, I can modify this, and I can as well modify the lot size if I really want to. As the signals are not specifying any lot size, but simply giving you the predetermined analysis. So the risk money management is something that you probably want to pay attention on your own. Underneath, we have here the news section. If I'll click on the news, I can filter it as I want. We have from left to right Forex, stocks, commodities, indices, and cryptos. The advantage using this news section is that here at the bottom, it tells you which instruments it's related to save you the trouble and the time to know which assets to analyze after going through the articles. And in here, we can see that the pre-European market brief. We have here crude oil, gold, Bitcoin, and Aussie versus dollar. And perhaps this will hint how what will be fluctuated from the articles above. Underneath in discovery, we have here analysts view, market buzz, forex features, ideas, economic calendar, and trading calculator. I'm going to show you the main two that I think are very interesting. One of them is the market buzz. And in the market buzz, very simple, we have here bubbles or circles, whatever you want to call them. And here in the center, of course, I can toggle in and out. And here in the middle, we have the most popular instrument, and that is Apple at the moment. Of course, this will change. And by clicking on one of them, let's say click on Apple, we are getting to this screen here. And in the screen here to the right, we have all kind of news. I don't have to go through this randomly. I can specify if I want to either go for CAPEX or product release or lawsuit. Well, we don't have to be too good with fundamental analysis to know that a lawsuit might not be a good sign, right? So if I click here on the lawsuit, we see here which articles can be related to that specific subject. And by unselecting it, it's showing me in general the things here lined up. Yeah, this interface is very, very useful. Let's go back. I don't want to delay too much about that, so let's just go through the economic calendar real quick. Okay, and as you can see here, just a second, it seems like my screen is froze. Well, okay, I hope that it's good for you guys. My screen seems to be, oh, okay, great, now it's moving again. Okay, so the economic calendar is, again, super useful for fundamental analysis. The way that it works is it's aligned very, very nicely here with the previous result. Forecast is what we expect that will happen, some kind of range. Actual is what actually happened, and the importance is how powerful we think that this event will impact on the market. However, if we're going to take a look at the color of the text here versus the color of the text below the red line, we notice that the text here is a bit grayish, and in here it's a bit clearer. It's a bit more bright. And why is that? We can also notice the actual here, the result. And with this understanding, whatever looks a bit more gray, as you can see gray here, and has an actual, this is an event that already took place. And events that look like this with a bright white text, it's still yet to happen, and this is why we still don't have the actual, right? We don't have the actual. In this case, we also don't have the forecast, as you can see. And also I can filter it to specifically what I want. So let's suppose I'm not a big fan of, well, everything that is here. Let's suppose that I want to stick with maybe just the yen. So what I can do is click here on all countries. Let's click here on the arrow and click it again, deselect, and define Japan. There you go. Okay, scrolling up, and we see that this is the only event that we have today, the 40 years JGB auction, and let's expand it for a week, I think. Currently we're in 27th. Let's go for the 4th. Okay, so we have another one next week. See, it's medium. Let's expand it a bit more, see what we have in 2 weeks. Okay, so the household spending, October. As you can see, this is a major event. This is why it's marked in red. It's marked in high. For instance, if I would like to focus only on the major events, I don't really want to see the low and the medium. Let's go back to all countries. And I want to focus only on major events. So what I can do is I can click here on the high. As you can see, there is a section here called filter. And I can go from low, medium, and high. Let's go with high. And we see that now we're only getting the events that has high impact. Other than that, if I click here on the name of the event, it's going to show me a bit more details. And also in this panel, we can see the impact. We can also see the chart, the volatility, the chart price, the event price, and this unique function, which I really like, is that I can also book it into my calendar. And this is going to save me time to remember when was the event specifically and get ready for the event specifically. And I could just book it in my calendar as a brick, and I will have a reminder specifically for that event. It's more amazing than that. And I can go directly to the market and see the impact. All right, so this is very comfortable. As you can see, it's aligned very nicely, very user-friendly. Okay, let's reset everything. And I think we are ready, guys. We are ready to begin the second segment. I'll teach you a nice trick how to go back to the default interface from anywhere on the web trader. Just click here on the icon and it will send you back. Okay. Let's get ourselves an instrument to analyze, maybe from the commodities, maybe from the metals, and maybe gold. Okay. What I'm going to do now are preparations to make the chart a bit more comfortable for my eyes. Of course, they're not mandatory and everybody can have their own layout. Okay, and on the way, I'm going to explain here what is happening in the toolbar for you guys to enjoy it to its full extent. Our dear notepad. Okay. So in here we have the name of the instrument. I maybe looked for gold manually, but I could just as much type your gold, pick it from the list. Okay, if I go to the right here, we have the time frames at the moment when we are marked on 1D for 1 day. And if I'll click it, I'll see different sections, 1 minute, 5 minutes, 15, 30, and then a new section for hours, age for hours. Then I scroll down, and I see we have more hours, days, weeks, and months. I don't know if you guys notice here, there is a light blue toggle here that I can click and drag. And if you don't want to do that, you can just scroll on the wheel on your mouse. Moving on to the next icon here, I can change the shape of the chart if it will present candlesticks or bars, or it will present a primitive line. It's a little bad name to call it a primitive line, but there is a difference when using the line to identify certain levels, which could point out some very strong analysis tips that unfortunately the line is not presenting. Okay, so I want you guys to watch what happens where I've marked it with a pink rectangle. Just a second. Okay, so this is when we had when gold went down and it broke the previous support. Don't worry, guys. I'm not doing anything crazy with analysis. Just explaining here something about the difference in candlesticks to the line. Okay, so in here, we see the tail. So we have a drop, then reversal. And in here also we have decline. And if I'll change it to the line, we don't have those levels presented. Okay, we don't have those levels. And those levels can give excellent analysis ideas. All right, so moving on with the candlesticks, moving on to the crosshair. As you guys probably notice, when I move across the chart, I get no information from the candles. And the reason is that this crosshair is the default crosshair, and it's to click and drag and not to provide with information. If I'll click here on the arrow and I'll switch from no crosshair to crosshair, and I have this cross following my hand, then I get data from the candles and I can do proper analysis. In here, I can change the layout and split the charts to multiple charts. So I can split it to 2, and I can split it to 3, and I can have it aligned, maybe up, one on top of each other, just like that. And I can also pull it out to a separated window. Okay. In here, I have indicators. We're going to add one anyway in a minute, so we don't want to do that now. And in here, I can get all kind of lines, horizontal line, trend line, and a rectangle if I want to mark a certain area, or even the text. Okay. Each of those lines can be modified by clicking on the cog here and simply changing it to what I want. So let's suppose that I want specifically 2,780, let's suppose, then I click save, and it jumps exactly to that price. Okay. That's about the toolbar. Let's click here, buy or sell. It doesn't matter to get this panel to open. You can either click buy or sell. It's not going to launch the position, but it will open you the order entry on the instrument details. These two tabs is to specify the numbers of this instrument. If I'll click here on the instrument details, I can then find out what is the lot size. And if I scroll down, the times that it's operating, the spread, the leverage, the margin, and in here at the bottom as well, the overnight fee. I will reduce the lot size for the minimum for the sake of the example, enable the execute to end price hits, take profit, and the stop loss. Now let's jot down gold. Okay. Now, when we see gold, as we've probably understood, after 2 days ago when it dropped nearly, I think a little more than $100, 112 or 111, something like that. We can also expect, as we can measure the momentum here, okay, with a trend channel. Okay, we're going to have the same momentum here, same motion here. It might be very interesting. Okay, and with that in mind, we understand it still has potential to go bullish. Of course, it can turn around, but from what we see in the past few days, it's been bullish. And if I set a target here in the middle, I don't specifically know how much can gold possibly move. Okay, and if I'll risk with a buy now without knowing where to aim, let me just show you quickly how frequent the direction changes. This is back to 5-minute candle. Every 5 minutes in the past hour and a half, not every 5, we can say roughly every 10 minutes, the direction has changed. Therefore, when I'm looking at the chart here, I don't want to just take a random buy or random sell, right? I want to take a buy. I need to destine a certain area for this. I need to destine a certain level. So possibly where it can get to, maybe to 27.19. Maybe we can even call it 27.20. All right. So maybe it can move here, maybe it can move here, maybe it can move here, maybe even much higher. So how could we possibly have a range to where it can move to? There are a few ways. One of them is simply taking the numbers from the previous candle, making a very, very primitive comparison, jotting down the big boy here in red. Let's jot down the date and then the figures. Okay, and by dividing these two groups, just a second. Okay, and by dividing these two groups and simply subtracting the open from the close and the high from the lows, we can roughly estimate how much gold has moved 2 days ago. Again, I'm referring to the big bearish candle. Okay, so that's, to be precise, it's 109. That's just the results. But if I will compare the bottom to the top, okay. So this is the maximum movement that we had 2 days ago from bottom to top. All right, now I can take those numbers and I can say, listen, perhaps with those numbers, I can expect tomorrow to be like it was yesterday, or I should compare it to 2 days ago. So what will give me more accurate number? Of course, the problem with this is that two candles are very, very different from each other, and I can never rely on it to be an average movement. Therefore, from the nature of this example here, we understand that taking a candle or two candle or even three candles, I mean, look at the size of this candle. They are all super dynamic in size and fluctuations. So taking a single candle or even three might not be enough. And I have to repeat this exercise, which could be very fatiguing and time consuming. What we can do instead is go here to indicators, click on indicators, and in here look for AVE for average true range, click and drag it to the right. Then I can mark here as many candles as I want, even 20. Okay, I might not want to go this far, maybe I'll keep it for 15 for the sake of the example. And we have here Wheeler simple weight or exponential, and in here we can have maybe 1px, 2px. At the moment we'll settle with 1, then go here, change it to a more bold color for me to see on the chart, then click save. And now instead of relying the 114 or the candle from yesterday or the candle from 3 days ago, I actually have an average based on 14 candles that I should have, if I would want to do this primitively, I should have done this here the same way that I wrote down open, close, high, and lows, and go all the way 14 candles, not including weekends. All right, which again can be time consuming. I'm not telling you guys not to go for this primitive. It's called manual check. So I'm not telling you guys not to do manual check. If you're bored for fun or you just want to confirm the ATR, you're welcome to do so. But I think that this indicator provides a very nice average for you to begin with. And it helps me understand that if I want to close this position in a day or two, the approximate movement that I should expect will be ranged approximately 33. So in here, I'm going to go and jot down ATR equals 32.998. And next to it, I'm going to go PAM for potential average movement, which is my version to the ATR, just adjusting it to make sense more to my target. And now, with this in mind, I'm going to then set a target to help me estimate how much I can make on this position. If I simply got to go with a minimum, as we can see here, we are marked with 1 unit. And I'm simply going to go with the advice of the ATR. And I'm going to change the take profit here to be exactly as the ATR here on top of the current price. That means that I'm going to take the current price, 2650.4, and I'm going to add to it the ATR, which is 32.998. And then I'll see that the take profit that should be, if I'm aiming for the exact movement, is this. And I can simply take it and paste it to the, just a second, it didn't work. Perhaps I need to do it manually. Okay, no problem. 2683. 398. And I see that, oh, just a second. 83. There we go. And I see that if it moves this way, if it moves $32 and I with 1 ounce, I can make $32. Okay, great. But what if I want to make perhaps 1,000? I don't want to make $32. I want to make 1,000. Okay, so I'm going to set here a realistic target I'll be happy with, and not $30. And also, I don't want to make $1,000 that it will take me forever. I'm willing to give this position maybe a week. Okay. Now, of course, the average that is here is daily average. And if I'll switch here to weeks, I will have the average for weeks. But I don't want to use that. Okay. What I'm going to do instead is I'm going to take the number that is here and I'm going to perhaps adjust it to be suitable to make 1,000. Okay, so the 32 here that expected to make in a day, since in a week we have 5 days, but I'm not expecting a linear movement. I'm expecting a range, right? This indicator is called average true range. So instead of 32 multiplied by 5 for a week, so you can see here, we have an average of 86. So 86 is not something that I'm really happy with because I think that the past week has been fluctuative, as you guys see. So I'm still going to mention it, but I'm going to go for a more realistic number, which is 50. Okay, and with this 50, I'm going to make the same comparison and add it on top of the current price. Since when we are with the buy, the take profit needs to be in a higher place. So we must add it. If this would have been a sell, I should have subtracted for the take profit. So 2649 plus 50, we can actually round it to the 2700 mark, flat. Oh, sorry. Okay. And we can see There we go. And we can see that if it moves 50, we can move 50. So in order to make 1,000, all we have to do is to simply divide the target by the movements. This way, 1,000 divided by 50 equals, who knows, guys? Excellent. Albert, you are the first to be right. So 20 is the necessary amount of units I need. If I sustain 20 ounces across $50 per ounce, I will make 1,000 that I want to make. Of course, using the same comparison means that let me also do it for the stop loss. Actually, we can call it 2,600. And we just add the difference here. We need to be more precise than that. Okay, well, it will keep on moving anyway, so we shouldn't be worried about those $9. Okay, and as we can see here, so far what we have is quite amazing. Okay, so far what we have is we have a take profit set to make 1,000. We have a stop loss set to potentially lose 1,000. We're going to look at that and decide if this is good for us or not. The take profit we choose was based on the ATR. Of course, we didn't take the ATR to its full extent, understanding that this is just a range. This 86 that we got for a week, I'll go back to weeks, is not a guaranteed number. And this average true range, as it's called, it's an average of the true range. It's not a guaranteed number that gold must move. Of course, as we saw, it can move more than that. As 2 days ago, it moved to 114, but it can definitely move less. Okay? So click here, back to days. And in here, okay. All right. The problem with this stop loss, maybe the take profit I'm quite happy with it, but the stop loss, if I'll use a simple equation, when I divide if I want to know my exposure, what I can do is I can take potential loss divided by the balance, and that gives me a number, and that number is times 100 equals exposure. Therefore, if I'll take the 1,000 that I am supposed to lose, God forbid if it goes sideways, and I divide it by my $10,000 balance, it equals to 0. Okay, let's do it with the calculator. Okay, if I divide 1,000 by 10,000, it equals 0.1, and 0.1 times 100 is 10%. Okay, as you can see, X times 100. So that's 1% exposure. And if it's 1,000, it will be 10% exposure. Of course, we don't really need a calculator for that. And everyone knows that 1,000 is out of 10,000. But this equation is very handy, and you can use all kind of numbers on it to know a specific exposure that you are at. Now, if I'm not happy with this ratio, when I can lose 1,000 or I can gain 1,000 or lose 1,000. And let's suppose that I want to have it 1 to 2 or 1 to half, and I wish to make 1,000, but potentially I want to lose only 500. What I must do is I must adjust the stop loss. Okay, of course, I can also reduce the lot size, but if I reduce the lot size, it will also have an impact on my profit. So I want to maintain the same profit ratio, but I want to only reduce the possible loss. And the way that this can be done is I must get the stop loss closer to the entry. Closer to the entry, and then let's place it this one here. Also, I can confirm it with the resistance. Analysis wise, it's not all the way to the resistance, so this might be good for me as an example. And here that exactly below the support line, and that means that, okay, just to point out analysis and analysis basics. When I say support or resistance, I'm referring to the edge points on the chart. Okay. You can find it in every time frame. Every time frame you can find support and resistance. Okay, and in different various levels. All right. Never mind. Let's focus and just finish the exposure here so you guys can do comfortably risk money management. Now, the way that it can be done to reduce the possible loss while maintaining the profit ratio is simply by getting the stop loss closer to the entry. Of course, I need to be careful when I'm doing that. But if I reduce it by, let's suppose from 2,600, I'll go a little higher to 2,625 as an example. Okay, so as you can see, instead of expecting $50 down, I only expect $25 down. And then I enjoy a ratio of making 1,000 and potentially losing only 500. Now, again, if I'm not happy with the 5%, of course, half of 10 is 5, right? Half of 10 is 5. And if I want to reduce it even more to 2.5, I need to get it even higher by another $12.50. Okay? And then, but this is, guys, I want you guys to be careful when you're moving the stop loss and the take profit, so you won't end up placing it too close. Okay? If you place your take profit, the stop loss or the take profit too close to your entry, what can accidentally happen is, if the market flinches against you, it can trigger the stop loss or the take profit, and then to go to where you expected. Okay, so when you're placing them, you must give you need some space to maneuver. It's also something to consider. I strongly suggest using the simulators here. It can really help you adjust the position and make a comfortable risk money management. This is regarding what I showed here. Just a few words about the leverage, margin impact, and the value for you guys to also know if you have enough capital to take a position or not. Okay. As you can see here, since we are taking 20 ounces of gold and the price for gold is 2,652, so that's 2,652 times 20, right? That gives us the value. Of course, you don't have to do that if you're using the platform because the value is already here. Now, since I'm using AvaTrade and I enjoy leverage, which is presented here, it multiplies buying and selling. And because hypothetically my ability is multiplied by 20, what I can do is I can divide the value by the leverage to know the margin impact, which in this case, 53,000 divided by 20 gives us 2,652. 2. Okay, which is again the true amount needed for me and not this much. This is what I would have had, sorry, this is what I would have needed if I wouldn't have the leverage. Yeah, let me just quickly show you that. This is a calculation. It's good for people who are using the MT4 or MT5, right? Of course, you guys understood because the leverage is the exact amount as my units. It brought it to the same price, right? I hope you guys notice this price and that price is the same because the leverage is 20 and the amount of units is 20. But this could be just as much, let's say 10. And then the price, as you can see, the price here, the margin impact will be half. This would have been 40, so this would be double than the price. It will always be compared to the leverage. Value divided by leverage equals margin impact. Why is that important? Danny, why are you telling us about the margin impact? Who cares about the margin impact? This is something, guys, that you must pay attention to. Your margin level needs to be maintained, because if you can't maintain your margin level to a certain point, if your margin level drops below a certain percentage, the platform will start closing your positions. Keep that in mind. So you won't accidentally wipe out the account. Pay attention to the margin. And that's it for today, guys. Unfortunately, we have a minute. I would just like to simplify what I said earlier. This technique, this approach is basic, but it gives you the ability to have control on the position that you design. The way that I did, I wanted to speak a little bit about the execute when price hits. I'm just really 2 words. What it does, the execute when price hits, is it lets you set a price to automatically launch a position. If I don't want to buy now, if I don't want to sell now, I can set the price and tell the platform I only want to buy when it gets to 2600, 2650. Okay, and then it will open the position then and not at the moment. All right, guys, tomorrow we have the live Q&A. You're all welcome to join us. I hope this webinar was fruitful. I wish you all a great week and have a good day.